What up? What do you do, YouTube? It's your boy Ascension Capitals tapping back in with another video. And in today's video, I want to talk about where I've been at with trading and a little bit behind how I trade and, my style of trading and, pretty much where I see myself heading within the next, few months, few years and whatnot. So let's get into the topic at hand. These magnificent views. So when it comes to my trading, as I mentioned to you guys before, over the past 2 years, I've been trading demo. I haven't really much invested in like a personal account or, prop funding accounts because I just feel like I haven't been there mentally as far as my edge and my confidence when it comes to the market. So, I've just been trading demo over these past 2 years and, it's been ups and downs, growing demo accounts, blowing demo accounts, treating them as if they were, the real thing, if they were my own funds in a personal account or a prop funding account. So, still trying to do that and still trying to focus on, growing things consistently and treating them as professional as possible as far as drawdown, how many trades I take a day and as far as profit targets and things of that nature. So, for the past 2 years, I have been a intraday trader. I have been using the 1 minute time frame quite a bit, and it has its ups and it has its downs. What comes with a lot of, some people say the 1 minute time frame comes with a lot of noise, but really it's just knowing where you are on a higher time frame perspective. So that's one thing that people kind of misunderstand about the 1 minute time frame. Yes, there is a lot of things happening, but you have to know where you are in structure to really make that time frame work for you. So that's what I've been doing over the past 2 years, trading the 1 minute time frame in correlation with the higher time frames. And I've been thinking about switching it up. It's kind of taxing showing up to the charts every day, even though I do it anyway because I do love trading. But at a point in time when it comes to the workplace and living life, it kind of can get in the way of that. And I'm aware of, I got into trading for the freedom, and I don't want to be in the future glued to the charts every day when I do decide or when I am ready to do this full time. So that is something I have been keeping in mind, and swing trading can definitely be the key to that. And I feel like swing trading is a lot better because you don't necessarily have to be glued to the charts every day, and you don't necessarily have to always be checking your position every 5, 15, 20 minutes. You know what I mean? You can just kind of set and forget. So that's something I've been experimenting with, back testing, forward testing, and just trying to collect data on overall. And thinking about it in the past, I have seen a lot of success, like as far as like higher time frame setups. I see them play out a lot more cleaner, and the delivery is a lot more smoother when it comes to order flow and things like that nature. But usually they just always work out more often than not on the higher time frames rather than the lower time frames. So I've been thinking about switching that. So I have been experimenting, like I mentioned, and I'm thinking about making that transition. So I have this sort of challenge for myself, and this is kind of the whole game plan behind it. So I am starting a new demo account, and I want to grow this demo account in the risk parameters of a prop firm account, a 100K prop firm account. And I'm looking to grow this 100K demo to about 20% in profit. And once I'm able to do that, not consistently, but once I'm able to do that, I will be looking into buying a prop funding account and looking to grow that and invest those funds into a personal account. And I'm aware that this may take some time, to grow this demo account to 20% and eventually get funded and fund my own personal account, because I feel like that is the goal, to have personal funds, to be able to, trade the amount of size that you want, hold trades over the weekend without, any risks, without any like regulations towards that. And that's just something I've been wanting to do. So yeah, man, I got this demo account challenge set out for myself, looking to grow 100K to about 20%, and that's about $20,000. And I've actually already started. I actually started yesterday, and I'm going to keep the parameters of a max 10% drawdown, meaning I can't lose no more than 10% of this 100K account, and I won't be able to lose no more than $10,000 at any given time. And if I do, that means the challenge has failed. I have to start over. Whoop-de-doo. But I'm looking to grow this and treat this as professional as possible. So I will, try to keep my head on a swivel and stay as sharp as I possibly can. And, staying in those risk parameters. And pretty much I'm just going to show you guys how I analyze the markets and how I analyze the charts according to more of a swing trading type of style. And I'll give you guys a little trade breakdown of the first trade that I took on this demo account challenge, and just give her show you guys the whole process, and follow this journey along with me. Like I said, I will be documenting this whole thing. So yeah, man, this is the road to get funded, and it's gonna be one to remember, because I'm documenting all of this for myself mostly, just to document my journey and see how far I've come once I go a long way, but which I know I am. I have 100% faith in myself. But yeah, man, let's get over to the charts, and I'll show you guys a little bit on how I analyze the charts and where we are with this demo account challenge, and overall just how I analyze the charts. So let's get into the charts, and I'll see you guys there in a second. Yo, I hope you guys are hearing me very, very fine. So here we are behind the charts. I'm going to talk to you guys a little bit more about this demo account challenge. Pretty much what I'm doing this for is just to, prove to myself and prove that I have an edge to really go for a funding account challenge. I feel as though if I can do this as professionally and the risk parameters of a prop firm, I will be able to succeed and to be able to continue to collect data and put money into a personal account, because as I mentioned, that is the ultimate goal here, is to have personal funds to trade. So that is my goal, and that's what I see the people that I look up to in the trading industry, that's the same things that they do. Doyle Exchange, QBanks, ZM Capitals, ARA, Matt Gray, all the dudes that I look up to. So, that is the ultimate goal. So here, that's what I'm trying to do with this demo account challenge and growing it to 20% and staying in those risk parameters. But yeah, man, let's get into the mother freaking breakdown, man, and I'll show you guys a little bit behind the first trade on this account and how it went. So I'm gonna replay price here, and that is on USD CAD was the first trade taken on this account, and I'll show you guys the MT4 and where I executed price at and all that good jazz after the breakdown. But let's kind of analyze price and where we are currently on the 4-hour time frame. And as you guys do know, I do trade supply and demand, so that is how I am, the whole overall perspective of how I'm analyzing things as far as structure and my terminology and whatnot. So here, as we can see, price is obviously moving in what direction? Yeah, in that bullish direction. So if I mark out the highs and lows of the most external swing points within this price chart here on USD CAD, I see this point, this point here, and this point, and we haven't really gotten a significant pullback yet, so I can't really predict the next movement in price. But the first thing that I see here is a break of structure. So that first indication that price is stronger and that we are going to move up. And what price left behind? Some imbalance. And these inefficiencies often get filled, or fair value gaps, or whatever you guys call them, but I call them imbalances or whatever. And then the next point that we see, we pull out our premium and discount tool from the lowest point to the highest point of that new range. And remember here, when it comes to a premium and discount, I'll quickly relate this to, the real world. So when prices are premium, this is, when stores get new products in the store, or they just came out with a new PS5, obviously price is going to be high because there's a high demand for that. So this is considered premium, or premium pricing, or premium products. So this is an area where you want to sell. And when it comes to discount, that is quite the opposite. Black Friday, you got all the sales on everything. The PS5's on the low. You get all the game system and games for the low, the furniture for the low. And that would be considered your discount. And that's when, prices are lower, and this is the time to buy. So here on this premium and discount tool, anything here you sell, anything in low, and this is when you buy. So as I can see, this point of interest here, this last little consolidation zone before this big impulse, was these candles here. As you can see, price came back down after that retracement to mitigate this zone, and we continue to rally. So once we break that swing point, the highest point of that swing point, or that swing, the range that we're in, what do we have? Another break of structure. So our second indication that price is getting stronger. So we are in the field for buys. That should be the only thing that we should be looking for. And and those imbalances within that leg too. So let's mark out that new swing trading range, or that new range, I mean. So the new range is between here and here. So this is your new trading range. So you only want to take trades within this range. And again, we pull out our premium and discount tool from the swing high to the swing low of the range. And we want to look into that discounted area to see if there's any sorts of zones or point of interests that we can enter the market from. So as you can see here, I see there's an imbalance resting right here. So it's very likely that price will pull back to the zone before it, continues in that bullish intent. So price is probably going to pull back within the zone. And I see this point of interest that sticks out to me. These last few zones right in this area here. So I would take this zone here and, just be patient and to see if we get a pullback from the zone to continue something like this. Simple as possible. Just follow the trend. The trend is your friend. When it comes to reversals are a different story, but you always want to follow the trend because that's where, the money is. So let's kind of play price out here and see if that happens for us. We get, a breakthrough. Look at that. That's something different. That's something new. That's something new. So look, price broke past the area that we wanted to get into the market. And it broke past the swing low of this entire trading range. So now we have a whole different storyline going on. Now this is where a shift in market structure happens, or a change of character, because market was bullish, now it shifted to bearish. So that would be considered your change of character. So let me mark this out here, and a new change of character. So we have here. So now we have a whole new trading range. So from this high to this low here, and price could very much move a little bit lower, and we would just drag down our swing point until price starts to give us that big pullback up into this range. So now this is your trading range. So if we pull out our premium and discount tool, look, we're in a whole new range. So as you can see, price was bullish, but now we have shifted to bearish. So now I want to mark out where I see those imbalances in the market. Where could price could be likely drawn back to? So here, mark out that imbalance. Okay. Okay. So it's very likely that price could pull back into this imbalance or this fair value gap. And I would mark out this. If you were interested in getting into the market, I would probably mark out something like this. Now, these zones can get quite ugly. They're always not as clean as, most of the SMC traders show you on YouTube about the last up candle before the down move. It isn't always that clean, you know what I mean? So that's why I say I like to take a group of candles, something like this, if I was interested in taking a trade. But let's see what the market does here. So we're expecting price to come back up until this point and start the reversal and continue in its bearish direction. So let's kind of play price out here and see what it does. Okay, we get a break into that zone. Look, okay, price broke out of that zone, so it did not respect that area of interest if you were interested in getting to the market here. So what happened? Price broke structure up into the upside. So price is constantly, can't make up its mind right now. It's shifted structure to bearish. Now it's shifted its structure back to bullish. So, price can't really make up its mind. So when I see stuff like this happen in the market, I know the market is kind of moving sideways, or there's a lot of indecision in the market. So let's continue to follow out price and see where it's going in its intended direction. So all we want to do is follow the trend. As I mentioned, the trend is your friend. So now here we have a new trading range between this high and this low. So this is your new trading range. So next thing we would do is bring out our premium and discount tool and drag it from the high to the low of that trading range. So now price has showed us a different intent. It changed character, now it wants to go bullish. So remember, anything in this discounted range, this is where you want to buy. So you want to look for your area of interest inside of this area. So obviously what I see here, more imbalance. Price is very likely to retrace to this point before it continues in its intended direction. So I see here, this is the last area of interest that I really see. It has imbalance here. So this is when I would draw out my point of interest, would be these last little consolidation candles here. Consolidation, again, consolidation before that big impulse. So this is the origin of the move. So this is what I would do here. This would be my point of interest. This is why I would be interested in getting to the market if you were interested in getting to the market. And what else could we see? Let's even throw in, something a little more advanced. Let's see. I see this weak point here. Price came down to this area and then quickly fired back away. So it's very likely that people got into the market in this area. So this would be an area of liquidity. So there's money resting in this low here. So this could be a high probable zone. You have liquidity resting just before your area of interest. So let's kind of play price out here and to see if price respects the zone and continue in its intended direction. Okay, it looks like price swept the low of the area of interest. So price swept my area of interest and continued to go in this intended direction. So when things happen like this, this is still considered a valid zone, so I still would consider this a successful, reversal zone, because although price did sweep this area here, as you can see, price swept this liquidity here. And why did it do that? Because there was these equal lows resting just at this point, and they wanted to come and grab these lows here. So let me mark this out here, sell side liquidity. So we came and swept these lows and boosh, gave us that fire up to the upside. So now this is when I came into the market and I was analyzing this pair, okay, where can I get into the market based off of the data that I've already seen, from the market. So I can see price was bullish, then it started to shift it back here, that change of character, and then it changed of character right back. So, price kind of had some indecision, but now it looks like it's continuing in that bullish order flow. So once I saw this, I saw price at this point. I was expecting price to break through this point to make a new trading range. So we didn't really do that. So as I play price out now, it just kind of gave us some relatively equal highs here. So as we know, relatively equal highs is a form of liquidity, and liquidity is bound to get swept at some point. It might not be in that session, or it might not be that same day, or maybe even week, but liquidity is bound to get swept. So as I played price out here, I was kind of monitoring the markets and expecting price to come and grab that liquidity. I go ahead and considered this my trading range, and I pulled out my premium and discount tool from this high to where that liquidity is. So as I'm analyzing this, remember, this is the area, your premium and your discount. So I was looking to buy within the discounted area. So as I can see, I saw some liquidity, or not liquidity, excuse me. I saw some imbalance resting right at this last area where this buy to sell candle is. And I marked that out. I said, okay, there's some imbalance. So this is a high probable area where price is likely to reverse from. So keeping that in mind, as I mentioned, you don't really want to over refine your zones when it comes to your points of interest or your order blocks. So I pulled these last two candles here. I definitely want to keep the imbalance within this point of interest, and I dragged it to the low of that last buy candle, and this was my point of interest, and this is the area where I was interested in getting into the market. So let's kind of play price out here and see if we get that reversal into this zone and continue that rally, grabbing this liquidity here. So as you can see, price kind of played out here, and now, oh look, another high. So here we have another, wrong grab there. Let's pull this liquidity over here. So another high that's bound to get swept. So we have relatively equal highs here, an imbalance. Price had already previously swept liquidity. So this setup to me was looking very high probable. So I grabbed my parameter tool and set it on the top of my point of interest and just at the bottom of this point of interest. And you know, when it comes to your stop losses, when it comes to your point of interests, it's easy to, get swept out. But when it comes to the higher time frames, it's a little bit easier to, have a tighter stop loss, because price may come very close to your stop loss and then reverse, or sometimes it can, come and sweep you out and then reverse. So, it's always best to give your stop loss some room when it comes to your point of interest. So I could have easily gave it some room like this, because as you can see here, price got swept out, and if I would have taken this position here and kept my stop loss tight, I would have got swept out, and it would have continued to go in favor, and just would have lost that trade. But giving your trade some breathing room, you would have very much still been inside that position. So it's best to leave a few pips of room when it comes to your stop loss. So but for this position, I had it pretty tight on there. So and then I was aiming for a 1 to 3, because for this demo account challenge, that is my, my kind of my sweet spot when it comes to risk or reward. I want to, risk 1 to gain 3. So I kind of had a 1 to 3 here. Well, I didn't kind of have, this is what I had. And then I just kind of let price do its thing. I set my limit on Wednesday, and price gave me the mitigation on Thursday. So I just kind of patiently waited for price to kind of tag me in here and see what it was going to do. So let's kind of play price out, see what it does. Gave me that mitigation here. So now I got tagged into the trade, and it quickly started to fire towards the take profit level. As you can see, we smashed TP. So, TPs don't often happen this fast when it comes to taking trades on the 4-hour time frame. As you can see, let's pull out, measure this here. TP hit in about 24 hours. So that was about a day and 6 bars right there worth the data. So usually it takes anywhere from, I want to say, from an hour to 2 weeks to hit your TP. So, you have to have some patience when it comes to, taking higher time frame setups. So you always want to be disciplined, patient, and consistent when it comes to taking higher time frame setups, because it can happen really fast or it could happen really slow. So in this particular setup and on this demo account challenge, I am risking 2% on any given trade. So like I said, I am staying in those risk parameters of, profit target of 20% and the drawdown parameters of 10%. So any given trade, I am risking 2%. So for this position here, I was risking 2,000 to gain 6,000. As I mentioned, this is a 2 to 3 risk to reward ratio, and I'm going to pop up on the screen here the whole trade on MT5 on how I took it. So for this demo account challenge, I will be using MT5 as the broker. MetaQuotes does offer demo accounts, so you can open a demo account through MT5 itself. And once I mentioned, I will be using an abundance of pairs throughout this challenge, because throughout any given week you have multiple opportunities. When you have more than one pair, it's not really good to trade one pair when you are swing trading. So I am doing that. And before I actually took the USD CAD trade, I did have two other trade ideas, which Euro NZD and GBP USD, but I didn't like my entry on those two, so I did close those early with a little bit in profit. So that goes there. So that brings my account to a little bit of 6.8%. And there goes my fill and my take profit levels. And yeah, so we're going to continue to try to, keep this as professional, as disciplined as possible. And, do what I got to do to pass this demo account challenge. So I'll keep you guys updated along the whole journey. And currently I'm waiting on 2 trades in the moment throughout next week. So let's see if those play out. And yeah, let's get back to the rest of the video. And where I got in and whatnot, to show you guys a little bit of proof on that for this demo account challenge. And I am using MT5 as like the broker or whatever. But yeah, man, when it comes to taking trades on the higher time frame, you have to be a lot more patient, and I would say you have to trade a lot more pairs, because you could be waiting for 2 weeks for something to align according to your plan. So it's best to give yourself a lot of options when it comes to trades. So as you can see from my watch list here, I do have quite a bit of pairs here, and I do still trade intraday when it comes to the NASDAQ and gold. So that is something that I'm not going to put down 100% quite yet. So I still do intraday and scalp gold and NASDAQ on the 1 minute. But for the most part, overall, I am looking to move toward swing trading. So yeah, that's pretty much how I'll be moving forward. So I'll be keeping you guys updated along this journey of this swing trading challenge I have, this demo account challenge I have for myself. So yeah, man, that was the first trade that I took on this account, and it was a USD CAD trade and a nice 1 to 3 trade. And that's pretty much how we'll be analyzing the markets when it comes to this challenge, and doing my thing. So thank you guys for watching. May we all keep rising and we all keep doing our thing, man. I know we're all going to be great someday, but we got to remember to keep treating ourselves right, always swim in the light, and keep positivity first. So maybe I'll keep rising, and I'll see you guys in the next one. Peace.